Today I'm speaking to Mr. Stephen Green, the Group Chairman of HSBC. Your first quarter was not too bad. You're holding out quite nicely. The US household and the HSBC finance franchise is still challenged. How is your business in the US going to play out, especially with the US government trying to influence how banks rewrite their loans, their mortgage books, and so on?
Well, thank you for the opportunity to talk about this. And the first point I'd just like to make is we weren't the first bank to be affected. We were the first bank to say there was an issue. I think it's rather different. We, in late 06, early 07, said there was an issue with the performance of our consumer finance business, particularly in certain areas of mortgage business. And we started in the course of 07 and 08 to quite significantly rein it back and give up market share in the process. And indeed, if you look at what was going on in the market, it is surprising and interesting that in 07 and 08 people continued to write quite significant volumes of mortgages in the US market that subsequently started to show impairment. We were reining back very sharply at that point. So whilst this is a business that has clearly caused some difficulty for us, what I am pleased with and indeed proud about our approach is the way that we were honest about the issues early and took the measures to deal with it early on. That culminated in a decision early this year, which we announced at the same time as our 08 results in early March, to close the consumer lending business to new business. We had last year closed the auto finance business, and earlier still the mortgage services area. That was the area where you were buying loans through brokers. So that business is now closed and on rundown, and we will approach that rundown with a very professional and orderly attitude, which will bring this business down in an orderly way. And I think that's the important decision to have taken. We took the view that that business was a model that wasn't going to return to profitability any time in the foreseeable future, and the right thing to do was to recognise that. That's very manageable within the context of HSBC, because one of the things about HSBC, the value of which has been demonstrated by this global financial crisis, is that we are very large, diversified, very strong in terms of both liquidity and capital, and therefore this undoubtedly difficult business issue in the US was one that we're able very comfortably to manage within the context of the overall performance of the HSBC group.
Assuming the global equity markets continue on a pickup run, and that in turn leads to the real economy coming back, what other pockets of problems do you envisage that you need to sort of work through before we see a real recovery?
Well, I think that really goes to the question of what does the global macroeconomy look like over the next year or two or three. And I think it's important as a starting point to recognise that the financial crisis that broke from the middle of 07 onwards is not yet over, and it is the worst economic and financial crisis that the world has experienced since the war. This is a major phenomenon affecting all markets one way or another. The effect on different countries has been different, of course, and what is notable is that Asia is continuing to show a considerable degree of resilience. If you look at China, its growth prospects for this year, we believe will be somewhere between the 7 to 8% area. We believe that India will generate something like 6 or even a little bit more than that percentage points of growth. And a number of other Asian countries will perform reasonably well. If you think about that in the context of a global scene where the G7 countries are all in recession, it shows what a robust economy Asia is. Now, that hasn't happened by chance. It's happened by government policy orientation, which I think has been cohesive and forthright. In China in particular, the stimulus program was ambitious and is being seen through effectively, and I think that's a very important part of the reason why China has been able to withstand the blow of a very sharp slowdown in its export sector.
Now, what you're saying right now, is that in any way a contradiction from the way in which HSBC had been moving just before the crisis? You had become a lot more of an OECD type institution rather than Asia Pacific. In fact, you would say that you were writing down a little bit of what you had in Asia at that moment.
I don't think I'd quite agree that we were writing it down. And I think what is true is if you looked at us further back, we had become very broadly spread and maybe didn't have enough focus on what were the really key markets.
In percentage terms, Asia was starting to look smaller and smaller.
I think that was true as a result of acquisitions made in the UK going back into the early 1990s,
right.
In France and elsewhere, and of course the household acquisition in
now,
the US.
But
in the last 2 to 3 years, we've been very clear in our minds and very clear to our investors and to the public at large that our primary focus is on the fast-growing markets, particularly of Asia, Middle East and Latin America, where we have a good franchise built up over the last 10 years or so.
So the decisions that you have to make in the US and also in the UK in terms of writing down your exposure to subprime and so on, does that mean a step back? Or?
No. Well, I think it's important to talk about this market by market. As far as the US is concerned, that decision that we took about consumer finance is a once and for all decision. We're not going to get back into consumer finance in the US. We have, of course, a bank in the US. We've had it for a couple, 3 decades. The HSBC US, which is a primarily New York State-based bank, and we have in recent years been developing some presence in other parts of the US. The important thing that we major on now and are very clear about and have been clear about over the last 2 to 3 years is that our calling card, our distinctive competitive advantage, is our emerging markets franchise, our strength, and it's a strength that's very deep-rooted and long-standing in markets like Hong Kong itself, of course, above all, but also mainland China, India, Southeast Asia, the Middle East, and more recently Latin America. We take the view that those are the markets which are going to outperform the mature markets, not just for the next year or 2 or 3, but actually for the next generation and beyond. And this is part of a very fundamental shift in the global macroeconomy, which is playing to our fundamental strengths.
Let's visit